Good afternoon. Welcome to GrainTV. It's February 27th, 2014. I'm Logan Burgess. To my right here is Cody Bills to help break down a very volatile day for the grains in Chicago. Let's jump into the quotes here and see where we settled the day off. Corn down 7.5 cents on the March contract. Soybeans up 13 3/4. Chicago wheat down 17 3/4. Cody, the big story in today's trade was certainly the soybean market. Break down for us what we saw today and what to be looking for in tomorrow's action.
Yeah, you know, if you look at the close, you'll notice that soybeans wasn't down as much as wheat, but where the real trade action was in the range of soybeans.
Yep.
Take a look at the first 15 minutes of the trade. We rallied very sharply higher. On the May contract, we got up to around 14.45 You know, in just a matter of a minute, we went up about 20 cents. So just to give you an idea of how fast we went up, well, we came down just about as fast as well. Middle part of the day was mostly made up with consolidation, but we really started to gain some steam to the downside. By the end of the day, the bears were firmly in control, closing out near the lows of the day.
You know, Cody, if we take a look at a little bit of a longer time frame here, the obvious question and the question we've been getting a lot in the office here is, does today's move signal the end of the soybean rally, which has really just continued to march higher, continued to plow through areas of technical resistance?
Well, I don't think you can guarantee any sort of end of a bullish trend, but what I do know is that this definitely puts probability on a reversal. Yeah. You take a look at this kind of price action, and a lot of people associate it with what's known as a blow-off top. This candle pattern is actually called a shooting star, and it is indicative of a reversal in trend, and it happens after a strong bullish trend. So I would pay close attention to how we open tomorrow. If we open lower than where we close, it would imply that the bears are still in control tomorrow, and I think, you know, tomorrow's price action is really going to be very it's going to show kind of be a tell as to where we go from here.
Yeah, if you want to take a look at these markets for yourself when they open up for the overnight session, or take a look at these continuous charts that we're using here on GrainTV, you can visit us over at grainhedge.com. You know, this morning, Cody, we did get export sales out, and that report was kind of overshadowed, I think, by some of the volatility that we saw in soybeans. If you take a look here, the first column shows what was expected. Right column shows what was actually reported for combined years total sales. You can see another very good week for corn, 842,000 tons sold there. Soybeans in line with trade expectations, not a big driver there, and I really think today's export sales report didn't have a lot to do with what we saw in that front month bean contract today. Chicago wheat, another week of good sales there, 564,000 tons. But let's take a little bit of a closer look here at corn. As we know, corn sales continue to really outstrip expectations here week after week, and if we take a look right now, where these corn sales at are in terms of the pace needed to meet final USDA expectations for the marketing year. If you take a look here at this slide, you can see we look back to 2009, and basically this compares how much corn is committed for export sale at this point in the marketing year as a percentage of total USDA expectations. As you can see on this chart, typically at this point in the marketing year, we see between 60 and 70% of total expected sales booked. This year we're close to 90%, so corn bulls are going to be pointing to this as a fact that the USDA is going to need to make revisions higher in the coming weeks or coming months reports, and obviously it's going to carry over to ending stocks.
You know, what you're showing here, this chart is very clearly showing that corn is running ahead of pace in terms of sales compared to expectations. But of course, on Monday we're going to have export inspections giving us an idea of how much corn is actually leaving the country. Is the amount that's actually being shipped out of the country as much as we're seeing booked?
Well, you know, take a look at this slide. This actually kind of details that well, and you can see here that once again 2014 kind of stands out as an outlier compared to what we typically would see at this point in the marketing year. This slide here shows how much of that corn has actually left the country as a percentage of the commitments that were referenced there in that earlier slide. You can see here typically in the marketing year about 60–65% of commitments have left the country. Right now we're sitting less than 50%. So once again, I think corn bulls are going to point to this as a fact that the futures market and the cash market are going to have to work to free up bushels here in the second half of the marketing year. And we could see some basis opportunities as export facilities may need to become aggressive bidders of basis to get corn to export markets. So just kind of two things to keep an eye on here in terms of total corn export sales so far. Once again, a good day today for weekly sales. We'll help keep you posted here on kind of these big picture stories here on GrainTV.
Well, that sounds fair enough. Seems as though export is very bullish for the export market seems to be very bullish for corn, but the price action today seems to be a little bit bearish for soybeans. We'll have to see how it all plays out tomorrow. Thanks a lot for tuning in. Give us a call at 877-472-4607 if you have any questions. And remember, you can take a demo of the mobile trading platform at grainhedge.com. We'll see you on Friday for the weekly wrap-up.